right, Carl, another good weekend out here in the West Coast, Midwest. How about you? Same?
Same, kind of a cloudy, rainy weekend. Not really rainy, but all right, got some stuff done. That's all good.
So all you can do is get some stuff done. Listen, ES is open above the pivot. Now it's below the pivot. Really tight range here, 6 points. Again, a typical summer Monday already. Oil chopping around same area, hanging above that 98. Breaks 98, it'll go test that 95 again, which is the low end of our 95-105. I still think, and I agree with you, you said this before we came on, more downside yet. Looks like 1240 still on the ES.
Yeah, I'm still buying Copenhagen.
Still
buying this dip. Yeah, that's the only dip I'm buying right now. Yeah, I think lower. I found it interesting that over the weekend, too, that apparently, how Goldman's been bullish on crude, all of a sudden they're short natty gas, too. Yeah. So, and I would be interested to learn when they got short natty gas. I would guess it would have been early in last week when we had some not so good economic news.
Yeah.
So, I think our U.S. dollar, you need to watch that. The U.S. peso continues to represent the unwillingness to have any political will whatsoever. So it's in a precarious position where the U.S. peso is. That's all I'm going to say.
Yeah,
technically, I think you need to keep your eye on the bond market. I don't think there's good things brewing there.
That little test of 73, though, is pretty bullish on the daily chart on the dollar right now. I still think we're going to see. We're at 75 right now. I think we could see 80 in the next few months, which would again put continuous pressure on all markets. So I think that continues to play out the whole picture. We'll see a technical bounce here in the dollar, which will again put some pressure on the overall markets, stocks, commodities.
I would agree with that. I would absolutely agree with that. That's what the trade that has worked in the past. I'm not so sure that's the case this time.
Right.
So keep your eye on the dollar. That's all I'll say.
Yeah.
I think there's trouble brewing in the bond market.
Yeah, there sure seems like it's the boat is fully loaded against that bet. So I would agree with you. You really got to watch the bonds right now. So pretty quiet Monday again here. I don't have a lot more to offer. The doom and gloomers are out there saying that we're headed for epic disaster. Jeremy Grantham, go out and read it if you want. Big picture macro guys. Yeah, that's true, but that's not a trade I can put my hat on. So like you said, I don't really care about the doom and gloom. So.
Well, let's just talk about that for a second, because I saw somebody that that's pretty prominent on Twitter this weekend said, "What if we crash? What would you do?" And I actually started laughing because crash, come on, we've been trading essentially 3 standard deviations above normal since March of 2009.
Right.
And now last summer was the only time that we returned to midline. So if we return to midline, wouldn't that be more realistic trade that's happening? I mean, come on, these crash people.
Right.
We're not going to crash. And if we did, is it really a crash?
Right.
Yeah. That's what gets me.
Yeah, exactly. It's just normalization. We've had a false the hand there propping us up. Yeah. So, reality is more, as you said, somewhere in the midline between the low that we've seen and where we are now. That's not really a crash, though. So you're right.
If we traded back to the 1150s, wouldn't that be higher than last summer, even early last fall?
Of course it would be. Yeah.
Yeah. Whoa, we would be red on the year, wouldn't we?
Right. Yeah, red on the year. Well, we're red on the year, I think, right now. I think we're sitting at that, 1250 level, I think, whatever. We're flat on the year.
1257-ish, I don't know what it was, yes. But
we're flat on the year. But the bottom line is, you got to put the whole thing into perspective. I don't see us going to 660 now, this year, next year, not with the election and everything. So, trade it.
Let me just say this. Okay, so we're higher in price in the S&P, right? And we have higher commodity prices, but our dollar's lower. What does that say? I think that speaks volumes. When I show that to people, regular people, it scares the shit out of them. Because I let them answer their own questions when I show them that. You know what I'm saying?
You're very Socratic, Carl, and that's what we try to do here is let people come to their own conclusions because, again, it's pretty evident what those numbers, when you present them that way, what they mean to people.
Yeah. You figure it out on your own. To me, it doesn't mean good things. So, but if you want to hire S&P based on a lower dollar,
so let me ask you something. Let me ask you something. Switch gears on kind of big picture. Everybody kind of mainstream now is talking about. We as traders have been talking about this for some time. It's kind of a continuation of the Govy bubble, but the edge bubble, the education bubble with the amount of tenured professors that, teach one class a week and, get their guaranteed pension and the $250,000 a year as a tenured professor, can't be fired. And they're in women's studies, no offense. They're in Arabic studies, no offense. They're in there's 20 people in every public university that carry these titles and teach one class a week. Are we in an educational bubble? What would you tell your kids if they were getting near that college age? How do you look at these things, as a, person with kids coming up? I mean, I'm just curious what your 2 cents are.
Well, if we're going to talk about this, my children are much younger, and I'm certainly trying to coach them in the right direction. I would be very disappointed if they, history is important, don't get me wrong, because, but I would be very disappointed if they didn't have a, education that, had some skills in that base.
Okay. So talk to me about that a little bit. You're not necessarily saying college.
No. I think college is very important. I think education is very important. I think you can get a college degree where you have skills, not a communication degree, skills.
Yes.
Something that's actually usable.
Right. So again, something that is marketable, usable, not oblivious to, again, just general communications, as you said, women's studies.
We can't all be wieners and get booted out of Congress and then go work for Goldman Sachs or something.
Yeah. But at some, right. And I guess my point in bringing this up.
Or be a lobbyist. We can't all be lobbyists, right?
Well, and you can't, and I don't think most people can justify $50,000-$70,000 a year for a liberal arts, non-skill based degree anymore.
Well, I think we pay too much for our education right now anyway. But that's right. Neither here nor there. It's because you have too many educators. So.
Well, it's a bubble.
Well, it's a bubble.
Yeah.
It is. Yeah.
All right.
And it's dropped by the government. If you take a look at who owns the bulk of the student loans, if you take a look at who owns the student loans, who's, I think that speaks volumes too. Just like it does when you take a look at the housing numbers. And Washington, D.C. is the only region that is up month over month and year over year.
Yes.
Speaks volumes.
All right, Carl, we'll be back here tomorrow, Tuesday, June 14th, Flag Day, I think, is always June 14th anyways.
Yeah, more economic data coming out the rest of the week. We pretty much know that it's not going to be so cheery, right? Let's see the reaction to it. Watch your levels.
It's all in the levels. Watch the reaction. Peace.